Dr. Sivaraman of iknowindices.com. Hope you're able to hear me. Let me display the PowerPoint presentation. Asian market analysis on December 20th between 5 and 5:30 GMT. We will be tracking the market using the live market code page. I'll give the link for the same. I'll also focus the camera over that of the live market code page. So currently Euro is trading around 1.3151, 1.3153. The low is 1.3126, the high was 1.3186. 36 pips negative net change is seen. And GBP is hovering above that of 1.55 area, 1.5478 was the low, 1.5526 the high, and 28 pips negative net change is seen. And Japanese yen is also showing a negative net change, trading around 83.86, 83.89, 83.84 is the low, and 84.10 is the high. Then Swiss franc, Swissy, 96.91, 96.94 are the current lows, 96.81 is the low, 97.18 is the high. We come across nominal 3 pips positive net change. Canadian dollar is also showing negative net change of 11 pips, trading around 1.0127, 1.0131. 1.0115 is the low, 1.0131 is the high, and Australian dollar is also trading at the negative net change level, 0.9874, 0.9877 are the current levels, 0.9864 was the low. They just about half an hour back, they came closer to the low without breaching the low, they have gone up, and 0.9903 is the high, and 4 pips negative net change is seen. So when you come across majority of the majors are showing, excepting Swiss franc or Swissy, you find negative net change. As a result, you find their crosses are also showing negative net change. Then you find Euro GBP is trading around 84.82, 84.85. 84.71 is the low, 84.99 is the high, and they have been hovering around 85 area on Friday, and now you come across 8 pips negative net change. And in the case of Euro CHF, they dropped considerably on Friday and currently trading around 1.2749, 1.2752, 1.2726 is the low, 1.2783 is the high, 27 pips negative net change is seen. Similarly, in the case of yen crosses, you find negative net change, nominal negative net change, because Euro GBP are showing negative net change, it also USD yen is showing negative net change. So you find that week beginning they are making the false move. Let us see how exactly this week they intend to make the moves in the market. Let me focus the camera over that of the PowerPoint. So expected market moves for today. Japanese session swing and rise moves are expected, and you will come across this week beginning false move only pertaining to that of the Japanese session. And then during that of the European session, they are expected to gain further levels above that of the high and then continue to rise. From there, they are expected to make a drop during the start of the European session or towards close of to a start of US session or close of European session, and then subsequently gain the levels or rise the levels. And so we could come across a week beginning false move during that of the Japanese session. So every time we come across a week beginning false move happening, so the previous week, the first week, we came across, the second week we came across the week beginning false move during US session. The last week we came across week beginning false move during European session. And this week we will come across week beginning false move during Japanese session. And then subsequently they are expected to show their intentions very clearly. And if you could analyze the initial lows and the highs set, they came closer to that of the low around 4:30 GMT, but they did not breach the low, and they went up in Euro GBP. GBP they came slightly below that of 1.55, and Euro they came quickly from that of 1.3156 to 1.3126. But without breaching the low, they have gone up and they are currently trading around 1.314951 level. So that shows that they have made a false move and they intend to gain the levels and go up to the high or slightly breach the high during the course of this Japanese session. Then European session, we could come across further gains in that above that of the high. That is what envisaged by that of the forecast. And also when you do the market reading, they made a false move up to that of the low without breaching the low. They are going up. So if they come to that of the high and if they don't breach it, then you can understand they are making only a wide range swings between the low and the high. In case if they breach the high and sustain above there for more than 30 minutes, then we can understand that they intend to gain further levels on the upside. So that is market reading part of it. So you have to use the forecast as well as market reading. Still we may go wrong. So we have to use the trading strategy to limit the risk and maximize the profit. So that is essential. Trading strategy is essential irrespective of that type of analysis you try to take. Then USD CHF 96.81 and 97.18 are the lows and the highs. They are not breached and you find a narrow range consolidation in the case of USD CHF, and still it is maintained 3 pips positive net change. So when Euro has dropped about 35 pips, CHF has just gained only 3 pips. That means they wanted to hold CHF and accumulate the sells. Then subsequently they wanted to gain the levels. Then in the case of USD Yen, 83.84, 83, 84.10 are the lows and the highs, and they are intact. And currently USD Yen is trading around that of the low. So here again you come across a false move. They are not breaching that low, and so you could come across a gain as a contrarian move along with that of Euro and GBP. As they are doing the downward contrarian move, they are expected to make the upward contrarian move as a continuation of it. Because of that, Euro Yen and GBP Yen are expected to be benefited. So when the low is not breached in Euro, low is not breached in Yen, 30 minutes of observation, and not breached in Euro Yen, then we can take a buy. That is how we have to take the decisions with regard to the buying in the case of the crosses. So the numerator and the denominator currencies, you have to see in the respective majors, they are not breached the low, but staying closer to the low. And similarly, in the case of the cross, during the mid session, if they are not breached, then you can try to take a buy. Still use the stop to limit the risk. Then Australian dollar, 98.64, the low during the Australian session or the Asian session. They came closer to the low and they were expected to breach, but they did not breach it at all. So that shows very well that players are holding it and they are trying to gain the levels again. It is closer to the low, 98.70, 98.73. And during the European session, it is expected to gain above that of 99.03 and just lead the way on the upside. Then in the case of Canadian dollar, 1.0115 is the low, 1.0131 is the high. Both are intact. And so you find a narrow range consolidation. And on Friday, they were dropping Canadian dollar, USD CAD, and also Euro and GBP just to handle that Euro CAD and GBP CAD, etc., the crosses. Now they gain the level. And another 100 pips they are expected to gain today as a contrarian move, because when Euro and GBP are showing negative net change, USD CAD is also showing negative net change, USD Yen is also showing negative net change. So these are all the currency pairs expected to participate in the contrarian moves for today. On the downside, you find the contrarian move, then later on the upside contrarian moves are expected to happen. So these are all the analysis with regard to the initial lows and the highs, and I also placed in the blog the initial lows and the highs so that you can just monitor it, how exactly they are handling the market. And so it is not the forecast alone is enough to take a trading decision. Please understand the market reading is very important, because from time to time the traders take positions differently in the market. So when they are dropping, probably the traders might be taking sell positions and later on realize that they are not able to book profit and quickly close the short and turn long. So when all the traders turn long, the players have to drop it before making further rise. So from time to time, you find the herd of traders continue to change their trading directions, either on the sell and buy side or on the buy and sell side. So obviously the players have to necessarily see that they are not easily booking profit. So market reading is very essential. The players know what are the positions the traders are holding it by various means. So as a result, they will make decisive drops and decisive rise. So you'll be wondering that when they are rising in a big way, why are they not expecting the mass selling from that of others or from the government or anybody? They know very well that such things will not happen. Then only they gain the levels, or similarly, then only they drop the levels. So when it comes to attractive buy levels, they hold it firmly and create the uncertainty for the traders. But later on, when euro goes to 1.33, then we repent. I could have bought it around 1.3150 or 1.3140. This is expected to happen every time. At the highest level, taking a sell, we will come across enormous uncertainty. At the lowest level, taking a buy, we will come across enormous uncertainty. So we have to come out of that uncertainty. Only then we will be able to take the trading decisions. For that only, I have given the market reading strategy. So forecast is a general consideration. What could be the possible ways of the market moves? And it is not necessarily the forecast has to come every 30 minutes to 1 hour in line with it of the expectations. It can deviate from there, but in the long run, it will just match it with another forecast. But before that, your trading should not go wrongly. So you have to consider that. That is very, very important. And if you just trade without a stop, then obviously the margin call could be the next attraction. So you have to limit the risk by reducing the number of positions you take at a given time. Suppose you have got only $5,000, take only one mini lot at a given time and try to book profit in that. Only then think of another trade. If you try to do that, you might earn only $50, $60 per day, but consistently you will be able to earn. But if you think that, okay, I have to earn the money as quick as possible, so $5,000, I'll take positions for $3,000 or $4,000. So obviously I'll do that averaging or whatever it is. We try to envisage a profit, then they can attract margin call. So you have to understand that margin call is one of the tricks in trading. So if you avoid getting the margin call, that is the greatest skill set one can get. And that is very, very important. And simply posting in the blog that I have blown up my account and things like that, that shows you are weak-minded. Only if you are weak-minded, you are not able to do any sort of even crisis management. See, planning is very essential for success. And you have failed to do the planning. Besides, also, you fail to do the crisis management. At least when there is the market is going against you, you should be able to accept the loss rather than simply allowing the margin call to happen or simply allowing the market to close all your positions just like that. That means you have become stunned. You do not know what to do. So if you have similar condition, it is something like driving a vehicle. When the vehicle speed has galloped and you are not in a position to control the vehicle, that means you do not know how to regulate the vehicle or how to drive. It doesn't mean that it is a fault of the vehicle. You are supposed to maneuver, you are supposed to control it. And if it is out of control, that means you do not know or you are not envisaged it. And you are not taken precautions for that. So obviously, when you are depending on somebody, and you need to be very, very alert. When you are depending on any system, you need to be very, very alert. And you cannot simply depend on the system and take a lazy look at the market, and obviously the market will show you the other way. So trading is not that easy as many of the people think that you simply buy and you will come across huge profit, you can book it. Not all the time it can happen. So in a dropping market, even a sell and buy trader can lose. In a rising market, even a buy and sell trader can lose. So that is how the market is structured. So it is not that when the players are handling so many positions of the traders, you have to understand what an amount of trick they would have developed in order to earn from everyone, and thereby you come across statistics. Nearly 90 to 95% of the traders are blowing up their account. So that means the traders have not controlled their emotions, they have not controlled their trading, and they are not fine-tuned their methodology. Simply somebody is telling you a methodology, it doesn't mean that you have to simply blindly follow it without making an understanding or without making a modification depending upon the type of trading platform you use, the time available for your trading, and also the margin available for your trading. So it is something like in the universities you study certain subjects, and in your work or in your job you will not use them in the same fashion. But what you use there is the logistics. What you have learned in your schooling or in the university, the logistics of how to derive things, and that is expected to work for you rather than the simple study what you have done in different courses. So you have to demarcate the difference between education from that of the trading. Education gives what are the means by which we will be able to handle situations. So it will theoretically explain the various concepts. But identifying such situations in a practical time frame is very, very important for a trader. Let me minimize the PowerPoint presentation and take up the questions which are asked here. Meanwhile, I'll focus the camera over that of the live market code page. Then Caesar has asked a question. Equities have fallen across the board today. Also, Australian dollar was the strongest of currency last week. What is the outlook for Australian dollar? Australian is expected to, it has come closer to the low. So there is a likelihood that it can breach the low before making a upward move. We have to just watch because it's an active session. The Asian session, you find most of the traders in Australia, they try to hold the positions and try to commit positions. So you have to see how exactly they are handling the low 98.64. And they may breach or they may not breach. You have to keep an open mind and see how exactly they handle it. But once it comes to positive net change, because the net change is hardly about 8 pips, once they come to positive net change and sustain above that for more than 30 minutes, that means the low is in. So that is how we have to determine it. I explained it in many times, but still, if I frequently explain it, then probably it will get registered nicely in the mind. Then with regard to the equities, it is just the week beginning. They are just making a drop, and the year end they are expected to gain further levels in the case of equities. Don't underestimate equities. Then Pankaj. What about euro? Yeah, euro has made the low 1.3126 and all-time the recent low was 1.3166 and they breached it and trading below that 1.3151 and their net change is 36 pips negative. Net change is seen. So if they don't breach the low again, then probably if they gain and sustain above that in a positive net change during the towards close of the Japanese session, then European session, we could find gains in that. And similarly, you come across more drastic moves in the market as such. They are only handling the crosses by showing negative net changes in all currencies, excepting 3 pips positive net change in the case of USD CHF. So they are just doing the week beginning false move in the crosses as well as the majors, and we could come across the gains here. So use the stop, and in case of a position is making stop, try to keep stop at it. So once whether you buy euro at 1.3153 or whether you buy euro at 1.33 or 1.30, it is immaterial for you if you are able to keep 30 pips stop for that. So your losses are showed only 30 pips. So you are not taking unlimited risk. So you will try to take a chance after making all the analysis in the market. Always try to take a buy near that of the low when the low has not been breached for 30 minutes of your observation. And similarly, take a sell position when they come closer to that of the high, not breach the high for more than 30 minutes of your observation, but try to close such positions within this session, because swing trades ought to be closed within the session or maximum to the early next session. Afterwards, you could come across some data release, etc., that could change the intraday market trend. So you do come across the trend reversals on a daily basis during the intraday time frame. So during Japanese session they may drop, and European session they may rise, and US session they may drop and rise. So you have to understand that. So they cannot continuously rise and continuously drop any currency pair. And if they try to do it, and the traders will visibly see the trend and they will try to take appropriate positions. They only induce the traders as if it is going to drop further down and take sell position and then quickly gain the levels. Then similarly, they make the traders to feel that it is going to indefinitely rise and then simply reverse and drop it. So last time also FOMC was used with regard to QUT, quantitative easing too, and subsequently this time also FOMC, they used it just to drop the market, and now another 2 weeks are there, they are expected to gain the levels. In DTPT, what is your view on USD-CHF? USD-CHF is holding in a positive net change. Slowly they could gain the levels, because when Euro has dropped 34 pips, CHF has gained only 2 pips. They are handling Euro CHF at the lowest level and trying to buy. And many people will be thinking 1.30 was a sell level, 1.27 was a buy level and peak level, but they will try to drop like that and induce the traders. You can sell it at 1.28 and buy it at 1.27, then subsequently trap and go up. So at the lowest level, sell and buy trade will look very attractive. At the highest level, buy and sell trade will look very attractive, but they are all traps. So if you use the stop and keep stop at entry and try to exit out of the position with a profit using a trailing stop and also the limit, then you will be successful. Otherwise, if you are trying to trade without a stop and things like that, that sort of trading strategy will not work. You have to identify the type of trading strategy depending upon your mindset, acceptance of loss and acceptance of profit. Because when the going is good, out of greed, you may not be able to accept the profit, what you visualize there, and you will try to maximize it without any strategy. Then you may end up in making loss again in the trade. So you have to control your mind in accepting the loss and accepting the profit. Do you see USD-CHF dropping when Euro and GBP rises? No, I am not envisaging that sort of drop, but they may consolidate here around 96, probably about 30-40 pips. They can make up and down swings and then subsequently gain the levels in the case of USD-CHF. Then again you are giving higher level in Euro 39.67 and GBP 1.6176 for the week. How this possible? No, they are the calculated levels. Okay, so we do certain calculations and try to give the levels. So if you ask everybody, they have their own methods of doing the estimate and try to give the levels. Whether they are going to be achieved or not, they are all theoretically derived levels. Practically we have to see how far they are going to do it. But the levels are given. Since it has been asked, I normally don't give the levels for a long term for that of the small traders, but since it has been asked, I am giving it, and it is not that I am simply repeating the level or keep on telling that Euro will rise. Many people have got the understanding or some idea that I am bullish all the time. It is not like that. So they are the estimated level. Now you come across about 1.3152 is the current level, and the weekly limitation is about 350 pips. Okay, so when Euro was around 3.3 and when Euro was around 3.4 level, this was estimated. And obviously from there, last week forecast went wrong. Instead of going up, it came down. So it has to be revised, but we are asked to give it the previous week. So they are the estimated levels for that. So we don't have any scope to correct it. So please understand that there are limitations with regard to that. Then DTPT. Do you see USD CHF rising to about 98, going below 96? Yeah, that is quite possible. And USD CHF is expected to go above that of the parity soon. Till such time, USD CAD is expected to hover around 1.01 to 1.02 area with little bit of plus and minus on the upside and the downside. And still, you will find USD CHF gaining the levels. Then Panca. Do any more use EA for trading? No, I don't use them at all. See, you have to understand one thing. Whatever the new technique introduced in the market, in the platforms, etc., and what are their capabilities of such advisors, are being informed to that of the players. So the players slightly modify their strategies to see that those who are using it, they don't consistently make money. So if you disclose your strategy to anybody, then obviously they will try to develop a counter strategy. That is the main reason that I am not disclosing it, my algorithm. In season. Do you see gold crossing 1,400? Yeah, by tomorrow we could be able to see that. No, don't think that a holiday is going to be a constraint which could reduce the volume. See, that is what many of the people think, that because that is a practice with regard to stock market, but in the currency market, you do come across on a daily basis international currency conversions, exporters and importers are participating in it. So obviously the market has to be there accepting 1 or 2 days holidays, and when the market is there, when less volume is there, obviously the volatility will increase. So instead of making about 100 pips swing, it could make even 300 pips swing. So keep that in mind. And reduced volume doesn't mean that it has to reduce the volatility in the market. The spread between the high and the low need not be 50 pips, 60 pips. If you just estimate, whenever that holiday feel started in the market, you just on a daily basis look into that of the high and the low set. You'll be able to understand that they have been making more and more volatile move in spite of the reduced volume. It is not only because of the holiday season you find reduced volume. You find a lot of traders have lost money and the new traders are coming into that of the market. And in the blog also you can see that how those who have been commenting earlier, they are not seen anymore, and you come across new people come there and without understanding anything they start commenting and expressing their emotions. So you find that this is how the game is. So the players know very well that when the old traders just blow up their accounts and go, they don't feel upset because they are happy that they earned money from them, and they look for the new traders to enter into the market and just give it as a donation to the other players. Then what is the outlook for gold? Gold, I said that earlier that it would go above 1,400 tomorrow. And it is going to be in the range of 1365 to 70 area on the downside and 1420 as the upside area. When we see weak beginning, false move, what exactly does it mean? See, before taking the market upward, they have to drop and create the feel it's going to drop and induce the traders to short. Then when they rise the market, the short sellers will come for short covering. Similarly, before making a drop, they make a quick rise during the start of the week so that the traders will develop a bullish feel and buy. Then later on they can drop and induce them to liquidate the long position. That is referred as weak beginning false move. Is it limited to Japanese session? That is what I explained, that sometimes they can do it within the session, or sometimes they can do it for 2 sessions or the whole day, very rarely. Or they can do it during that of the Japanese session or European session or US session. I explained in the beginning that the previous week or week before that they made during that of the US session week beginning false move. In the last week they did the week beginning false move during that European session. This week they are expected to confine to Japanese session. In December month of handling crosses, this time of the year, crosses have become more volatile because of less volume. Yeah, obviously. Then German. Please show the forecast. Yeah, I'll show. Then B-man. What will happen the end of December and early January? Will it be a beginning false move? Yeah, obviously you come across month beginning false move or the volatile move and year beginning volatile will be there. And I am expecting Euro and GBP or to close near that of the high for December. Let us see how exactly it goes. That is what derived from the algorithm. It can happen or it can just happen opposite to that also. See, I don't have any control over the market. Please understand. I can only derive it theoretically sitting in one place. But the players are more powerful because they have got the money power to do that. I don't have any such thing of that kind. Then players have showed currency Australian dollar as very strong and holding it high even when Euro and GB were dropping. Do you think that they will drop it too? They have come closer to that of the low now, 98.64, 98.67 in the case of Australian dollar. Okay, see how exactly they are respecting 98.64. So I need not tell you, you can estimate. If they come closer to that, for 30 minutes, 10 to 30 minutes, they don't breach it. That means earlier again 4:30 they came here and 5:30 again they come closer to that low. And they may keep ask also at the lowest level. But if they don't drop further down, that is a false. See how they are pushing it. 98.66 sell, 98.64. Quickly the green buy order comes. So you can just watch how exactly the low they are using it as the reference level. That is why I ask you to note down the initial lows and the initial highs and try to use it as your reference level. Because whatever they try to do it, if you follow, you will find all our tradings meaningful. Then Panka, you said that they may drop it before rising. Why they are referred, what they are referred? They are referred as stop loss or false move. If they come up to that low and go up, it is a false move. They breach the low and hit 20-30 pips below the stops and then go above that of the initial low in less than 30 minutes, then it is stop trend. Please go through my trading system webinar for your benefit only for the newcomers. We have recorded FX Street and myself. I have recorded all the 10 webinars and posted in the blog. Probably you have to do little bit of homework and listen to all the analysis. Not only my analysis, you review all the other type of analysis also. Try to develop your system of trading. So trading is not an easy task. It is something like driving a vehicle. So can you just sit into a car and start driving it? So you have to learn all the intricacies of it. So in the trading, you don't get the mindset to learn. For the simple reason, your priority is to earn, but you fail to recognize the process of earning the money. Because you require the money very badly. So you enter into that market not with your surplus money. Many of the traders, they enter into the market out of necessity. Probably they have lost the job, they have to earn somehow about $1,000 to $2,000 every month, or sometimes they wanted to see they have got some debts and they wanted to clear it by quickly earn money from that other market. But when they come into the market, they have to understand that it is also an art. It is a skill set. So if you don't learn that particular skill set and simply enter into that, it is something like without knowing swimming, jumping into the swimming pool or in the sea. Have you seen anybody who have not learned swimming jumping into the well or jumping into the swimming pool or the sea has come up? That's what's happening. People don't realize it. Then drop. The forecast, we already seen the drop and majors. Yeah, it can happen. I never say that the forecast has to be 100% true. They are all nothing but the estimates, sir. Similar to that of the chart study or a fundamental study, anything. It is a different study, that's all. It doesn't guarantee that the forecast has to be true all the time. I've been insisting it can go wrong, it can go wrong, it can go wrong. Happy? Then, do you recommend buy and sell for all the majors? Yes. Buy near that at the low, not at any level. Then DTPT, as the majors are still expected to rise. Yes, they are expected to rise. They won't. The red and green last only for a few seconds. So what can you derive from there? See, the red bid and ask, and also green and bid and ask, or the black and black bid and ask. They are nothing but, if the red comes, that means it is a lower level selling. Green comes, it's a higher level buying. So how they are altering it, you have to just see. And if it stays in black, that means they are not removing the buy order as well as the sell order. Try to derive it. You can watch the live market code page, you yourself will be able to derive it. I explained in my trading system how to review it. Please go through that. Then Devangan. Okay, Pankar. Please comment on the RSI. See, relative strength index, which is one of the measure of determining, but any single parameter is not in a position to give the appropriate expected market moves, pretty well. That is why various combinations of statistical derivations are being used, like MACD or RSI and divergence, convergence, and also Fibonacci. So always people going for such combinations. So that is nothing but a bias. According to me, it is not statistics. Because when you combine one statistical analysis with another statistical analysis without any statistical proof, that means it is bias. You have to objectively prove the null hypothesis that it will objectively work. But according to convenience, we try to use various type of simple moving average and weighted moving average or exponential moving average at our convenience. We find it is working better. It is working better. That is what the only conclusion. But why you combine these two? It is something like relating the markets, like stock market is compared with that of the currency market. They are all two different entities. Probably the chart pattern might look similar. Say, similarly, gold is being compared with that of euro, or the Dow Jones is being compared with the yen. So various type of such chart patterns can be simply superimposed and say that there are a lot of coincidence, but that does not sustain forever. So such coincidences in statistics, they are not approved as statistics. But still, people go in for such coincidences. There is a difference between the coincidence and the actual happening. Coincidence is an accidental similarity. So let me go back to that of then Australian dollar, seeing it near the parity. Yeah, either Wednesday you should be able to see above parity. Let me focus the camera over the PowerPoint presentation. Swing and rise moves are expected during Japanese session, and further firm up and rise are expected during the European session, and from the high a quick drop and a rise are expected during the US session. So the drop can happen towards close of European session or early US session. Just look for it, or during the gap time itself. So from 13:30 to 15 GMT, look for any drop. At that time, try to buy it. Then again, they are expected to rise. So you can do a sell and buy trade also after the rise during European session. When the high has not been breached for more than 30 minutes to 2 hours, you can try to take a sell position and quickly book profit during such drop. But you have to be very cautious. You have to keep stop at entry because you are trying to do a counter trade, because the major trend according to my algorithm is upward. But according to others, it is downward. So you have to be cautious either way using that. So when I am telling that the market will go up and another analyst telling the market could come down, so anyone will become correct. Okay, it doesn't mean that this forecast has gone wrong, the other forecast has gone wrong, because it is a question of only chances and When we do the analysis, it can go wrong several times. Keep it in mind. So that is why we always use the disclaimer and also say the percentage of success. So percentage vary from season to season depending upon various factors. We are trying to improve on it. Similarly, every analyst is trying to improve on the analysis. But still, you come across the challenge that the market is dynamic. So I take this opportunity to thank FX Street and also you people who have come here to listen to my Asian Session Live Market Analysis webinar. Tomorrow again we will meet same time 5 GMT and review the market. So understand whether Monday move was a weak beginning false move. So I already given the initial lows and the highs in the blog. I'll try to give the forecast and also give my market trading as updates in the blog to take up throughout the day. Thank you one and all.